Today, guys, we're gonna be talking about the anatomy of a retail Forex broker. All right, Kyler has an awesome position that he's looking at for what's to trade, and we're gonna be diving deep in the comment section to answer your questions. Show the intro. All right, traders, what's up, guys? Welcome back to the Kyler Cleveland Show. I'm Cleve.
I'm Kyler.
And today we are going to be diving deep into brokers. All right, last week we mentioned a lot about leverage and margin on the show. People liked it a lot. We dove very deep in all the different intricacies of margin and whatnot. So you guys can go watch that segment here. But if you guys have ever wondered, if you have the right broker, what are the things that you need to look out for, when it comes to a broker, you are at the right video. Okay, so if you guys are new to the channel, please make sure you guys subscribe. I'm really excited to have you. And if you like Kyler, and if you like me, then like the video for your boy. I really appreciate it. Okay, cool. So, brokers. It's a pretty big conversation. All right. I mean, what do you feel? How do you feel about brokers? Do you have a disdain for brokers? Do you think they're out to destroy you and capitulate your account?
Well, I guess it depends what broker you're talking about. Like some of the ones that maybe are not regulated, like such as FX Glory, I think they might be.
Yeah, no. FX Glory 100% is probably trying to blow you up. Mm-hmm. Traders View. Trader's Way. Most of the brokers that you see that have these outlandish leverages, they know that 99% of their traders are going to blow up, because usually the traders that are going towards those brokers are the newbie traders. So not only do you not know what you're doing, you also have an insane amount of leverage, which is incentivizing you to put on these massive positions, which is the main reason why traders capitulate in the first place.
Yeah, exactly. And I think some of them, they'll even promise to manage your account for you.
Right.
So,
and another thing they'll promise is like deposits.
Yeah.
Right. They'll say something like, if you deposit $500, we'll give you another $500.
Yeah.
And so one of the funny things about that, if you guys have a broker that's asking you to do that, I would honestly run as fast as you can away, because what's happening is they're telling you, okay, we're gonna give you another $500, but if you read in the fine lines, you have to like 10x that account to withdraw the funds.
Yeah, there's always some catch to it. So.
Right? And the funny thing is, if let's say you're down in your portfolio, I don't know, $250, you lost your $250. You cannot deposit or you cannot withdraw, that other $750. Okay, so usually you have to 5x or 10x the account before you can even take out that $500. And again, of course, you're fighting a losing battle. So one of the first things I want to talk about when it comes to brokers is, are the brokers trading against you? And that comes into this conversation when we're talking about FX Glory and all these other I hate calling out FX Glory. They've actually been in my inbox asking for promotions, but I'll never, right? So the problem is, right, these guys are what are they doing? It's called B booking you, right? Do you know a little bit of the anatomy behind B booking and A booking?
So B booking is really you going against the market maker. So when FXCM was promising to have their customers on an ECN, mm-hmm. they were really doing the client B booking for them. So all their clients that were supposed to be on the ECN network were going against the actual market maker. Wow. So there wasn't a lot of transparency there.
Wow. So literally, when you input a trade in FXCM, by the way, you guys can go look at the FXCM fine. We'll put the link in the description so you guys can take a look. Literally, if I wanted to sell the market, it was never an actual order. It was never going into the interbank network. It was never being sent to an aggregator. It was stopping at FXCM, and they were taking the other side of their position.
Yeah, exactly.
And why is that the case? Because they have the statistical knowledge of understanding how profitable their traders are, right? Mm-hmm. And so if they know that 90% of our traders are going to lose money, why not trade against them and be the person that makes that bread?
Exactly.
Right? And so B booking is happening 100% if you're dealing with an unregulated broker. All right? If I'm wrong, throw it in the comment section below. But most brokers, if they're hooked up to what's called an aggregator, or if they actually have the liquidity providers, which are pseudo aggregators, or if they're actually hooked up directly to the interbank network, most of those brokers, dude, they're regulated. Okay? And so B booking is an issue because if you are trading within a proprietary trading account like FX, this is what happened to me back in 2012 when I was just messing around at FXCM. Literally, FXCM, this was before TradingView. So what had to happen was these brokers had their own proprietary trading charts, right? Their own charts. And so their representation of where price was was their representation of where price was, right? So you would see some massive spike in the chart, and it would probably just be on your chart. But in actuality, in the real market, that never happened. So that's the kind of shit that can happen. Thankfully, TradingView has given so much transparency into what the actual market it looks like that's kind of hard to happen. You should honestly question any broker that's not using TradingView, because they can make their chart whatever the fuck they want, you know? And so that's what's really scary. So be careful with B-booking. What's A-booking?
So A-booking is where the customers are able to use the ECN network, which means it's an electronic communication network. So really your order is being passed on to, could be a conglomerate of liquidity providers, other market participants, or just anyone that's going to get you a tighter spread.
Right.
So there's really just more liquidity. And when there's more liquidity, there's going to be tighter spread.
Gotcha.
Tighter spread will get you a better price.
That's interesting. So that makes sense, because when you're being B-booked, there is no, the spread is frivolous.
Yeah, and they could really just make some up if they want.
Yeah, so they're saying tight spreads. It's like, okay, you're making tight spreads right now because you can. But when you're with an ECN and the spreads are tight, well, that's how you truly know that market's very liquid. So that's pretty interesting. So like, if you ever wanted to go trade like the Turkish lira, you'll notice that the spreads on that are ridiculous, and that's probably because there's not a lot of transactions happening on the ECN, because market participants aren't asking for the lira so much, so you're having to pay up money. So that makes sense. And so let's backtrack a little bit, because we talked about retail brokers, or we're talking a little bit about brokers, and we're talking about B-booking, but I do want to establish the retail broker industry overall right now, right? So there's 3 ways that brokers make money, all right? They can make money off of data, so off of your information, right? Your demographic, where you're at, and they may not send your name and your number, your social security number or whatever, but what they will do is they'll say, hey, these type of people are trading right now, and they may send this off to different firms or whatnot, right? So they also make money off of commissions. So per trade, you may pay a flat rate. Thinkorswim charges a commission on certain assets here and there. And then they make money off of the spread, which is, again, transactional. But the spread is sometimes variable, right? So the spread can widen in heightened moments of volatility when markets are going crazy. The broker, it's a little bit risky, because they have to send that order to the marketplace, right? And by the time they send that order to the marketplace, it all happens electronically. It's really fast. But if markets are going insane, then they can potentially lose money. The market maker can potentially lose money in those situations. So what they'll do is they'll widen the spread to hopefully make it so that some traders won't execute on that particular asset. And they also mitigate a little bit of risk by costing more per transaction. Right? So those are the 3 ways that retail brokers make money. This whole industry of retail brokers hasn't been around for more than 2 decades. Right, so FX has been around since, I guess, Bretton Woods in 1971, right? But Forex trading has been saved for larger, massive institutions, right? And so what happened was, since electronics and since technology has progressed so far and so fast, we have instantaneous access to all these different, streams of data. Okay, but before it was really expensive. I mean, you couldn't just have, data feeds coming in from an interbank network, right? But now, since the internet is just so, hey, it's here, hey, you can have these retail brokers. So as technology developed, as the internet developed, and as these platforms developed, it became more possible and more feasible for people at home to have access to these markets. But before, it was really expensive to have access to these markets. Right? So that's retail trading overall. Okay. And so the broker, they're here to make money. Some brokers want you to succeed. Of course, it would be in their best interest that you do well, because as you make money, you stay on the platform, you keep paying the spread. Right? But some brokers honestly have a ridiculous turnaround where they understand that, hey, most of the traders are going to blow up. 90% of traders are going to lose 90% of their income in 90 days. That's the 90-90-90 rule. And they're playing that game, right? They're marketing to you to get you in real quick, blow up, and then, hey, at the end of the day, they don't really care if you deposit or not. Again, they know litigation-wise, what are you going to do? You're going to send a lawyer to Cyprus or to some cave in Zimbabwe to try to get your money back? Probably not. All right. So that's retail brokers overall. And I want to progress as fast as I can, but I also want to talk about aggregators. Because there's the broker, right? The broker is literally just facilitating the trade. They're the consumer side. You have aggregators. They're the business side. So aggregators are in between the broker, and they're in between the interbank network. The interbank network is comprised of primary institutions. those primary institutions are connected to the central bank. Okay, so aggregators are aggregating the flow of the trades from the broker and spitting them back out to the interbank network, right? So a lot of times brokers don't have direct access to Citibank, right? They don't have direct access to TD Ameritrade, right? Bank of America, Deutsche Bank, okay? So what they do is they contact these, as what Kyler mentioned earlier, liquidity providers. And those liquidity providers' main job is to aggregate price from all of those primary institutions so there can be more competitive rates for the brokers and hence the brokers' clients. Okay, so that's the infrastructure of the market, all right? And so a little bit more business government side, central banks, they're connected to the primary banks, right? Those central banks have what's called reserve currencies. All right, those reserve currencies are the Aussie dollar, US dollar, Canadian dollar, the Japanese yen, the CHF, the Great British pound, the euro, right? Probably a few more, New Zealand dollar, all those things, right? So around 8 currencies, the currencies that you are mostly trading, those are required to be in the central bank, right? By the IMF, International Monetary Fund. So that is why you guys are trading those pairs. The only reason why you're trading the pound is because the pound is required by the IMF to be in the Fed. The Fed then lends the pound out to these commercial institutions. Those commercial institutions have that cash on hand, and now you can trade Forex, okay? And that's why it's a little bit harder and more expensive to trade currencies that aren't reserve currencies, because the bank isn't required to hold them. So if you want to trade the Turkish lira, if you want to trade the Mexican peso, right? If you want to trade these very exotic currency pairs, you're going to be paying what? A bigger spread. Why is that the case? Because lending costs are higher because those are in lower amounts on their books. All right, so that's the retail broker industry overall. Maybe what do we want to talk about us? Like anything else in retail brokerages that
we could go over about some of the brokers we recommend.
Right, yeah. What's some good brokers?
So I guess for in the U.S., we always want regulated, or just at Motive, we're definitely looking for regulated brokers.
Right.
That's just what makes our business more professional is utilizing that. So we'll look at Oanda, we'll look at TD Ameritrade, or using the Thinkorswim platform. Mm-hmm. We probably won't go to FXCM again.
Right, no. They are regulated now, but it's a little risky.
Yeah, or there's interactive brokers, but
yeah,
I think their minimum is $10,000. And I know a lot of retail traders just starting out can't afford that initial minimum.
Right. And outside of them, man, Forex.com. Forex.com is under GAN Capital. They're the ones that actually bought FXCM, and they're they're regulated.
Yep, they are.
Yeah, those are some of the good brokers. Those are brokers we recommend. Anything outside of that, let us know in the comment section below. Tag the broker that you use. Mm-hmm. How about that?
I'd love to hear that too.
Yeah,
where everyone uses.
Yeah, and what we'll do is we'll go in there and we'll let you know if you need to.
What we think.
If you can pull your money out. I know some guys, man. They literally had their money pending to be withdrawn for 4, 5, 6 months. You know what I'm saying? That's these. Just imagine a dude, sipping a coconut. In the Caribbean, he just launches a Forex broker. That's the guy you're giving your money to. And half these Forex brokers, Google Map, right? Use Google and look at the locations of where their headquarters are.
It's in some random places, some places I've never even heard of. So
dude, it's horrible. Okay, so you want to spot with a headquarters. Saxo Bank, that's another massive institution.
Saxo, for the people in the UK.
Yeah, UK. I think they're out of Switzerland and whatnot as well. Okay, so I think that's our diatribe on brokers. If you guys want some more clarity, let us know in the comment section below. We'll be right there to answer away. Let's move over to what's the trade. So there's 2 things that Kyle's been keeping an eye on. What are those 2 pairs that we want to see?
Well, first we'll go over the Canadian dollar. We obviously know the Canadian dollar is correlated with the oil prices. So we're definitely going to be watching how China it plays out. We did see that the China GDP was at the lowest in 3 decades. So that's probably why you're seeing some of the oil prices turn around. And you also saw the U.S. shale production, which shales the oil in the North Dakota or more in the Midwest. That production picked up too. So whenever the supply was increasing, you saw the oil prices start to come down. With the euro, we're looking at the Eurozone futures, which is pricing in a 40% chance that the ECB will raise rates by the end of the year by 10 basis points. So that's what we're looking at for the Euro USD possibly.
Yeah, what is the basis point right now for the Euro?
The deposit rate, it's in the negatives. I think it might be
negative 10, right?
Yeah,
Should be -10, which means if they
The
raise
current deposit rate is it's -4%.
-0.4?
Yeah, 0.4%.
-0.4. God, that's a lot, isn't it?
Yeah.
Wow, because the U.S. raises it by 0.25 every time, right?
Yep.
Damn. So if they raise rates, we'll only be up 0.3, basically.
Yep. Mm-hmm.
Wow. All right. And so it's still a big deal. Obviously, they stopped quantitative easing back in December. I think it looks pretty good. So where are you looking to basically execute the euro on a currency that's obviously a little bit weaker? Mm-hmm. What currency maybe would you like to see the euro? Just to name a few. What's a currency that you don't look maybe neutral about, or maybe that you're looking to sell over the next?
We could definitely go against the yen,
right,
depending on what's going on in the global economy. But right now, we are kind of seeing a risk on sentiment, so that may play out possibly.
Yen looks good, dude. Look at that.
Yeah.
Yeah. Okay. Anything else besides yen? I saw New Zealand was pushing a little bit to the upside.
New Zealand, they had their good inflation data.
Is that what that was?
Yeah.
Okay.
So you saw that big spike in the New Zealand dollar.
Okay. So right now we're looking still to see a little bit more strength from CAD based off of these oil prices. /CL. Here we are, CAD oil. Markets have still consolidated, like we mentioned. They broke out of this original fib that we had just slightly, and we did get a retest there, right? See that? We head to the 4 hour. You'll see a little bit more clearly. All right, here's our little breakout of where we thought we may see markets consolidate. Here's the breakout here. We've since then tested this level, and this could still be consolidation, right? We're only creating a larger range at this point. Okay, so that means that you are going to have to widen stops. Of course, the best opportunity to ever take these type of positions are that original breakout of structure. So we'll see what happens in that regard when it comes to the CAD. What's the time horizon on looking at this CAD move to the upside? We really just need more information. It's all dependent on the data at this point, isn't it?
Yeah, definitely. Well, I guess we take a look at the recent down leg. We see how long that played out. That was definitely a couple months.
Yeah.
But that doesn't mean that all those people that got in during those couple of months, they're probably going to be getting out faster, possibly.
Right. Just based on the news and based on how things are happening right now.
Or just a pile of shorts covering their positions.
Got you. Okay, so we'll keep an eye out on the Euro JPY then to the upside. That does look good to me. We'll talk about it next Wednesday on the next Cleveland and Collar show. We'll get a quick update, and we'll see what CAD does. I think CAD's going to consolidate for a little bit based off of these oil numbers. If I pull up an oil, CAD and oil look the same. I think oil is going to consolidate a bit. If it doesn't, here's the consolidation size. All right, if I was to draw it up and say, hey, this is where we may be in terms of a range, I think we may sit inside of this type of price area until we get a true blue fundamental catalyst that can drive us either back sell side or actually take us back higher to the upside. Sounds good? Okay. I like it. All right, so let's dig into the comment section. Kyle, can you read that comment that you mentioned? Who's it by? And it was a pretty good question. I know it dealt with brokers and whatnot. And covering, right? If could you owe your broker money? What did he say exactly?
So Shogun is wondering if you'd be liable to the broker for the amount owing should a worst case scenario happen, which could be a mini crash or a crash like that happened in the Swiss franc when they depegged from I think it was the euro, or just any news, or he says a busy signal to where you can't close a position, or just like lack of liquidity.
Wow.
So he's just wondering if...
Did he mention a stop loss in there at all? I don't think he did, right?
Well, gap down that blows past your stop loss.
Okay. So, Shogun, even you mentioned stop. That's awesome. Dude, if you read into the actual copy, right, the terms and conditions of the broker, you're 100% still liable if markets blow past the stop, right? So I really do want you guys to go check out that FXCM article. FXCM... Literally, they were hoping that their customers paid up over, I think, $300 million, right? I mean, so customers had a negative balance in their trading accounts, right? The reason why we love Oanda is because Oanda was still around throughout that same crash. This is the 2015 Euro-Swiss depegging, okay? It happened in January 2015. Oanda was obviously around during that same time, and they had a fraction of the amount of payments due for their clients, and they gave amenities to, or they let all of the clients that were trading with them that owed them money, they cleared that out, right? So they didn't have to pay up. FXCM, on the other hand, based on their shady practices and the way they were built, they actually had a massive payment due from a lot of their clients, right? So 100% you can owe your broker money. Obviously it's rare, right? But even with the JPY situation that happened last week or so ago, right? I mean, if I pull open just real quick, you guys, I want you to take a look at it up here. Here it is. So this JPY spike to the sell side, I'm sure there were some shady brokers that made it so that some people owe them money based off of that instance right there, right? So not the mass majority of them, but there were some instances, because this was a 300, 400 pip move in less than 3 or 4 minutes. Okay, so in these type of instances, definitely your stops can get blown past, especially if your stop loss isn't in the real, actual market, right? Your broker, if they're booking you, they're just going to make you they're going to make you owe them the money. So you got to be very careful in that event. So great question, man, and it aligned very well with our broker conversation today. Okay, so guys, please post some more questions down below if you got any. We'll cover them on the Cleveland Collar Show next time. We're going to get some more questions answered on the next show, but we're trying to keep this thing limited in terms of time, but we're going to save a nice chunk for comments next time. Okay, so 5 comments next time we're going to answer away. Make sure you comment down below, interact, please. That'll be awesome. If you guys need some help, and if you want to pull over into the Top Trader Academy, the link is in the description below. We'll be excited to have you guys in, and we'll keep an eye on this Euro JPY. If you guys have any questions about brokers, let us know, but I think it was a good show.
It was. I enjoyed it.
Perfect. All right, guys. See you guys tomorrow on Trader Tips. Peace out.